This is Shelley Kraft coming to you live on SNN Live. This is a Wall Street View with Mr. Rick Rule from Sprott USA. It's a publicly traded company. I'm going to give you two symbols. It's SII on the TSX and SPOXF in the US. Rick, welcome back to SNN Live.
Thank you, Shelley. It's a pleasure to be with you again.
It's good to have you. Let's tell our audience an overview of what you do.
Sprott Inc. is a natural resources finance house. We manage about $12 billion in investor funds across a broad spectrum of resource opportunities, including resource equities and, of course, resource lendings. In addition to that, we're the sponsor of 4 New York Stock Exchange traded passive investment trusts, which assist U.S. investors in making tax-advantaged investments in gold, silver, and platinum and palladium.
Now, what's the history behind the company?
We've been investment managers really based on Eric Sprott's and then more laterally my track record for 40 years in natural resource-based businesses. While there are many places to invest in the world, we've limited ourselves to the ones that we understand, which are specifically mining, oil and gas, agriculture, timber, and water.
Rick, what's unique about Sprott?
I think, first of all, the fact that we stick to our knitting. We only do one thing. We do the thing that we've done for 40 years. We don't try and be all things to all people. When you invest with Sprott or you invest in Sprott, you're investing in a team of 160 investment professionals, including geologists, engineers, and finance people with a long history in resource businesses that do just resource businesses. Many financial services firms flit sort of from what is popular to what is popular to what is popular, never developing any expertise in anything other than marketing. In Sprott, through good times and bad, we've been in the resource business.
Sprott's name is on the door of this conference. So what are you speaking about to the audience?
I speak about a variety of investment topics. Here at this conference with natural resource loyalists, I don't have to be a generalist. So here specifically, I've been talking about the three themes in mining investment which I think are attractive. The first is merger and acquisition targets. We're coming into a phase where mining companies are going to have to acquire other mining companies because they have underinvested in their development pipelines. We see that as being fairly easy money for the next 18 to 24 months. The second are the royalty and streaming companies, which despite the fact that they have valuations which are larger than the sector at whole, still we think have a more attractive outlook and present what is in a very risky sector lower risk opportunities to participate. The third is that we're moving back into an exploration market. We haven't had an exploration market for 20 years, and mankind as a whole has underinvested in exploration. Remember, Shelley, despite the fact that other sectors are more popular than natural resource sectors, everything in the world is grown or mined. If it wasn't grown or wasn't mined, it doesn't exist. And the truth is, the stuff of mankind, things that make your life good and my life good, are all mined. And we haven't been looking for them for 20 years.
So what do you tell the common investor, the ordinary investor person? What do you do in this sector today?
Ours is a cyclical, capital-intensive business. And so in our business, if you're not a contrarian, you're going to be a victim. You have to buy these businesses when they're out of favor. Right now, they're in fact out of favor. This is a fairly good entry time for people who want to be in natural resource-based businesses. All the hot money is in crypto and marijuana and various technology applications that I personally can't pronounce or spell. So if you are going to be in basic businesses, you want to be in basic businesses when they're out of favor, and this is such a time.
The mantra when I was on the street was buy low, sell high. How do you go wrong? You can't lose money doing that. So for people who are not who have no knowledge or basic knowledge of the mining and resource business, what would you say to them to get them started in the business today?
Well, it's a great mantra. Certainly, you can't buy low in a sector that's popular. So if you want to buy low, you have to look across the spectrum of the financial press and see something that never makes headlines. Technology is making the headlines. Real estate is making the headlines. Cannabis is making the headlines. Blockchain is making the headlines. Whatever is popular is expensive. Whatever is unpopular is inexpensive, and you never see headlines in the Wall Street Journal or Forbes about natural resource-based businesses. Ergo, relative to other sectors, they're cheap.
So, we haven't mentioned the price of gold in this entire interview. But I think it would be remiss if we didn't. Tell me about it. What do you think?
Gold is a unique natural resource asset in the sense that it's not part of the necessary stuff of mankind, except for its transactional capabilities. I personally own a lot of gold, and I own it for insurance purposes. It is at once a medium of exchange and a store of value. Now, ironically, it's the only asset class that I own a lot of that I hope doesn't go up in price. If you look at gold not as an investment, but rather as an insurance policy, Shelley, think about an insurance policy that you want to get paid off on. Auto insurance means you had a wreck. Life insurance means somebody died. So while I encourage every investor to have a holding in physical gold, I would also encourage them, ironically, to have that as the one asset that they own that they don't want to see rapid price appreciation in. Having said that, I think we are going to see price appreciation in gold. Gold moves broadly inversely with faith in the U.S. dollar. My own belief is that the current U.S. dollar strength is more a function of the weakness of competing currencies than it is the underlying strength in the U.S. economy. When I look at the price of the dollar relative to the encumbrances, the debt carried by American society at the federal level, the state level, the local level, the pension level, the consumer level, my suspicion is that either we see a default cycle in the United States or we default the old-fashioned way by inflating away the net present value of the obligation. Hence, I feel good about gold.
Now, let's take that feeling about gold and let's specifically talk again about these juniors and exploration and expansion outside of Canada and all over the world. And, I'm hearing some very interesting stories, and I want your comments on that.
Well, understand that at a natural resource conference, you're always going to hear bullish things about natural resources. So take half what you say and throw it out the window, okay?
I mean half what I hear.
Half what you hear, yeah.
I'll take the other half of what I say and throw that out the window also.
Take half what you hear at a resource conference and throw it out the window like you would experience in any other industry conference. But the truth is that mankind has underinvested in exploration for the last 20 years. And the consequence of that is that dog is going to come bite us. The exploration sector as a whole is one where the expectation in every individual decision is failure. What's lovely, however, is that the gains that you experience on your successful efforts can often be sufficient to more than offset your losses in unsuccessful efforts. Once you learn how, once you learn that value is associated with a fairly small group of people, there are 3,000 public exploration companies worldwide, and all of the real performance is generated by about 200 of 3,000. Once you begin to learn to separate the wheat from the chaff, when you come into periods like the one we're coming into, when you come into an exploration bull market, they last 4 or 5 years. And the upside that individual selective investments can make is mind-boggling.
I just want to finish off with your take on M&A and my view of consolidation in the industry. So I think that they're part and parcel to one another, aren't they?
Absolutely. The last bull market that we had in resources, last decade, the industry made some absolutely idiotic acquisition decisions. There were 2 consequences of that. One, the appreciation for the whole industry was diminished, and there was a dearth of M&A activity. But M&A needs to happen. And as a consequence of that, it's beginning to happen again. Mercifully, the bad decisions of the last decade still weigh on the minds of investors and managers. And so the acquisitions that you're seeing take place right now are uniformly good acquisitions. And acquisitions are always good. Bigger companies have lower general and administrative expense relative to AUM. That's a good thing. You spend less money running the business, more money on the business. And secondly, if you are a participant in a merger, intelligently constructed merger benefits the seller because of the immediate premium, and it benefits the buyer too. We're coming into a circumstance that's going to last, I think, for 18 months to 2 years, where both the buyers and the sellers are materially benefited by M&A. So I think you're exactly right in your description of mergers and acquisition being an intelligent way to play the game for the next 18 to 24 months.
So, Rick, before I get you to give us your website, let me thank you on behalf of my company and my family for inviting us again to this event. It's been fantastic. I just want to say that on camera. Secondly, now let's get your website out there for more information.
www.sprottglobal, SPROTTGLOBAL.com, or by phone at 800-477-7853.
Ladies and gentlemen, Rick Rule was gracious enough to give us this Wall Street view. He's from Sprott USA. It's a publicly traded company. I'm going to give you two symbols, SII on the TSX and SPOXF in the US. I'm Shelley Kraft. This is SNN Live, and we're coming to you live from the Sprott Symposium 2018 in Vancouver, BC, Canada. Rick, always a pleasure.
My pleasure. Thank you.